Disney has been underperforming its peers on the S&P 500 for, well, the last few years. And people aren't terribly happy about that, especially investors. The next quarterly earnings call for the Walt Disney Company is going to be this week on Wednesday, August 7th. We'll begin our coverage live here on Valiant Renegade at 8 a.m. Eastern. There'll be a link to that live stream in the description of this video. But a lot of people want to know before that call, are things going to get any better, or are they going to keep going the same way they have been? And Bob Iger is going to have a lot to answer for. So let's talk about that. Renegade Online. We're going to talk about that as well in this show, what our expectations are for this earnings call, because this is a really important one, and there's some key items in there, including a recent earnings call from Comcast Universal Studios out there, who showed that their year-over-year change in top-line revenues for the theme parks was down about 10%. So I'm really curious to see how comparatively Disney was impacted during that same, although a different fiscal quarter for Universal. It was a second, 2Q fiscal for Universal. This will be 3Q fiscal for Disney, but it's the same calendar quarter. It's the same April 1st through June 30th. So we have, the first part of a key piece of the year for theme park goers, vacationers, summer vacation. July 1st through September 30th will be another key component, but we're also looking for other things like, what did Disney Plus do? We'll talk about some of the things that Disney said during the last earnings call that gave investors a lot of pause, and it's one of the big reasons that the stock price has been down sharply since then. If you remember, at that earnings call back in May, the stock price was still hovering around 110 or thereabout. And since then, it has just fallen off again, over 20%. It's now down around 90. And I don't know if this earnings call is going to bail them out. We'll talk about all that in just a bit. But we have quite a few
they must love you. They must absolutely love your guts. You have single-handedly forced them to wake up at 4 a.m. Bob Iger, he's going to send you a chocolate cake anytime now. I just feel it. I feel it with little mousy ears on top. 4 a.m. Bob.
I have a feeling I'm probably not gonna get any
no eclairs.
Yeah, no eclairs, no bouquet of roses. That's what I was looking for from Bob.
That earnings call, the reason you want to be there is because we might even get, although I think it's a remote chance, but we could even get the opportunity of hearing an announcement when it comes to the next CEO. Could it be Dana Walden? We don't know. Will they make the call? Well, perhaps, but one thing that could be in the way, an impediment you might say, would be if Disney has a terrible earnings call. We don't know what's going to happen there, but we do know that the stock has been under the 90 mark quite a bit recently. And that means that Disney needs to do something desperately, or else they could be facing a hostile takeover, at least another proxy battle. And Elon Musk might be willing to fund some of it. Not sure how much he wants to get into it, but if he indeed, as he suggested with Dr. Jordan B. Peterson, is interested in taking on the woke mind virus, there is no better place to go than the House of Mouses.
And you're right. And my concern is, and we'll talk more about this, my concern is right now, I don't know. There's not a lot of information out there that gives me a lot of hope for what Disney's fiscal quarter looked like. And like I've said before, we can talk about, okay, they had some box office wins, and that's great. And we've acknowledged them, and we've celebrated them. But that's not enough to move the needle. That doesn't pay the bills at Disney.
Drop in a bucket.
It's a drop in a bucket. The theme parks are what's key. So
this is a theme park company. That's flat out. It's a theme park company.
Yeah, it really is. And the key is not so much what happened, but like we always tell folks, it's about the guidance. It's about looking forward. But here we are. Let me pull this up. Bing, bang, boom. Right here. Go set your notifications up for this right now. If you're on a laptop or you're on an iPad, you got a phone, you can open up a second window, either a mobile device, go to Safari if you're on your YouTube app, Set your notifications for this show. Make sure you have notifications enabled on your mobile device so you can get them. YouTube can push them to you. You can tell YouTube, hey, I want notifications when this happens. But if you haven't told your iPhone or your Android device to allow those notifications to be pushed through to your home screen, you're not going to get them. And I think maybe that's could be part of the problem, at least for some people. But this is make or break. Disney stock has not performed well. Yeah, it's going great. Now, to be clear, we obviously have a lot of macro level events that are pushing a lot of rising tide lifts all boats. Well, the opposite is true as well. That's having an impact on Disney stock as it is with most. Okay, but Disney stock, as we showed the other day, has still underperformed quite a bit. Just basically everything else. Let's go to the 6-month chart here. Let me pull this up full screen, and you can see how I've already got the S&P queued up. Okay, Disney stock in the last 6 months is down 21%. The S&P 500, even with all the recent summertime blues, as we call it in the industry, in the financial industry, because sour markets in the summer are far more common than they are not. Way more common, especially as we get into June, July. Sometimes it's defrayed a little bit till August or whatever, but the point is that summertime blues in the market are not out of the norm. We see corrections almost every year. And a market correction is it falls from its most recent high by at least 10%, but less than 20%. It's kind of where we are now for a lot of things. It's not uncommon. Disney obviously is grossly underperforming even that. The S&P 500 has returned 4.36% in the last 6 months. Disney has lost 21% in the last 6 months. That's a 25% swing. That's a really, really crappy beta for Disney stock. This is the last 5 years. The S&P 500 has returned 85%. The Walt Disney Company, and of course, it's covered up by the.
Show the folks where Iger came back. That's a very interesting.
30%. Yeah.
Just point to where Iger touched you.
Well, where did Iger touch me? Let's see. Let's go down here. Here it is, right here. 11:14. Here's 11:28. So 11:14, it was still Bob Chapek. By 11:28, 11:21, it was up. See that little spike? Bing. And then it went right back down. Nelson Peltz came in, right? Yep. Nelson Peltz ran it up. It got back up to about 110 a share. You can see right there the orange in the top left. And then, Peltz got out of the fight. The polish came off the turd. Disney was back down to 93. All right, there you go. And splat all the way down. Now, the whole market was not great at, towards or a good part of last year, but Disney was even, again, way, way, way worse. Disney got down to its worst point here at 79. Now, given what you said, let me zoom in on this real quick. You brought this up earlier, so I guess let me take
As you do, let me just say this, Valiant. Two things. One, it looks to me like, and you correct me if I'm wrong, when Peltz isn't in the game, Iger is limp.
Yeah.
And the second thing I'll say is that if you go back and look at Chapek at the end, folks, what was happening that drove the stock down under Chapek? Iger forced the company into politics against Chapek's will, and the man was under siege for 6 months, driving the stock down to get rid of him. It was orchestrated.
Yeah, that was a big part of it. And also it was the fact that, like we've talked about before, again, because I want to be perfectly fair, because I know we got a lot of Wall Street people watching. Wall Street was demanding that companies like Disney become streaming giants effectively. The push for the almighty, all-holy subscriber, kneel at the altar of the almighty subscriber. And it was all fugazi. I mean, it's just crap. You got to actually make money. And this, we'll talk about this because we're diving into it now. But, as far as the Disney earnings preview, this is part of the problem that concerns me. But getting back real quickly, since I have this up, we were talking about Ike Perlmutter earlier. Let me go back here. October 23rd, or the week ending, because I think this is on, this is weekly right now, 10/23, 10/30, so this is week by week, not daily. 79.33. Disney was at about its lowest point yet. Okay? This is right about the time that Nelson Peltz was jumping back in hard, right? October, this point of the year, this is when all the real news was breaking that Peltz was back. Yep. Now, what was Ike Perlmutter's? And here the way, all the way to 325. That is about 2 weeks before the annual shareholder meeting, which was on April 7th, I believe. And here you go, April 8th, it was still at 114. Peltz lost. Whoop. There you go.
Back we
What
go.
was Ike Perlmutter's magic number? Ike Perlmutter, who sold Marvel to Disney.
Oh, Valiant, they gave up. They tucked tail and ran. Listen, you need to read more of these Access Media types. They told you that he was a loser.
Yeah.
He didn't make any money off this. What are you talking about?
Yeah, that's just it. Now look at the numbers here, though. $79.33 a share. That was just before Nelson Peltz officially came out, or right around the same time he officially came out and said, I'm back.
And he started buying stock at this point. I'm learning things.
Well, he had, I think he already still had, I don't think he sold it.
He had a bunch, but he started picking up a bunch, I think.
He bought more. He bought more before this as it was falling down. But the point is, Ike Perlmutter said, I'll be a buyer again of Disney, which I have no idea why, but I'll be a buyer again of Disney if it falls between 65 and 75. Well, it was 79 in October. So according to Ike Perlmutter, who the reports came out about him selling it and said it was on the advice of his financial advisors. I guarantee you one of which obviously is, we don't even need to guess, it's a statement of fact. Nelson Peltz is one of those advisors. He said that's what he was advised to do. When he sold it, it was about $115 a share, average price. So he got out right after the proxy fight went sour.
So wait a minute. You're telling me, because I didn't see this in Screen Rant, you're telling me that they bought low and sold high.
Yeah.
I'm gonna check and see what is that what you're supposed to do in stocks? Hang on.
Occasionally. Obviously, there is a faction of let's call them market makers out there, because Ike Perlmutter absolutely would have been a market maker for Disney. His clout and power with the amount of Disney stock that he held. There's market makers out there that think that Disney hasn't tested its true low point yet. And they may be right. Now, this is not financial advice. And Valiant Renegade is not telling you that Disney is going to collapse tomorrow, the next day, or 2 days from now, 5 years from now. I have no idea. What I am saying is that there obviously are people out there that think, and they may be right, they might be wrong. I don't know. That's not my job here. But there are people out there, obviously, that believe that Disney is not done yet with its decline. Make sure you're subscribed to Valiant Renegade and join us every Sunday at 6 p.m. Eastern for the live show.